Hello, everybody, and welcome. Hopefully, we have a few day traders here today. This is a video I wanted to make a long time ago. I just wanted to wait until I could do a credible job. I think it is super important to let folks know that you are not losing because you are a bad trader. You're losing because day trading is incredibly hard. The stock market is the most competitive environment in the world. And every day you're out there, you are competing with the best that there is in the business. This conversation is not meant to discourage, it's meant to build you up and hopefully give you some tools so you can make it as an active trader. I'm going to give you some insights I've learned from my trading over the last 25 years. And I really want to just put you on your path to profitability. You don't have to day trade to make money in the markets. I love trading and I have huge respect for active traders. It takes a lot of guts to trade real money and live with the downsides. As a trader, we don't get paid to work hard, we get paid to execute well. There's no way to fake the returns with yourself. People will tell you that day trading is gambling. They say you can't beat the market. These people say all these things, but what they really mean is that they don't believe in you. And they probably don't even know what they're talking about anyways. All they're doing is running somebody else's programming. The first secret is that you need to know how to make money and you need to know why you're making money. I was something of a quick quitter. I tried day trading. I lost $1,000 in a week and I turned around and went back to the drawing board. I didn't quit because I lost money. I know it takes money, time, and practice to do anything well. I quit because I made money and I lost money, and I had no idea what was going on. Now, after years, when I win, I know why I win. And when I lose, I learn something. All these folks want you to believe you're losing at day trading because of something you did wrong. It isn't you. It's that you're playing someone else's game. Day trading is a very high risk activity. Practice is expensive and you need a ton of practice. Day trading gets all the marketing because selling how to make easy money is the actual way to make easy money. But the choice isn't day trader or passive 40-year investor. There's a false dichotomy that you're a day trader or you spend the next 40 years putting away in an index fund. What I think the second insight is that you don't need to risk your nest egg every day to make a lot of money actively trading. For me, actively trading over medium term has been the best way to prove out my understanding and increase my profitability. So instead of trading cryptic patterns, why not understand the market and gain from the financialization and some macroeconomics? These are all knowable facts. At the end of the day, there's two types of investors, active investors and passive investors. The vast majority of passive investors are profitable, and the vast majority of stock market millionaires are passive investors. However, we can steal their edge by changing our mindset and analyzing their approach. Day trading typically spams multiple transactions to make quick gains. But at the end of the day, you can't lose $2 on every trade and then make it up on volume. What if we did less transactions, took more time, and made up the difference with probabilities and leverage? The Dunning-Kruger effect is arguably the single most important psychological concept for understanding why so many folks fail at trading, especially in their first years. It perfectly maps onto the typical life cycle of a retail trader, from naive optimism to devastating realization, and finally, for the few who survive, a genuine competence. The downside is just too severe to try to learn something that's that hard and be so bad at it when any mistake blows up your account. On the other hand, if you're relentlessly risk adverse and can still take a few trades and wait with no downside other than holding a high quality asset, you're still in the game. you're learning, and you have a smooth upward trajectory. It takes a long time and a considerable amount of money to become an Olympic athlete. If you want to compete in day trading, that's what you're up against. I would say some people can make day trading work. It's proved in the studies. Unfortunately, these folks are in the top 0.5 to 1% of all traders. You do want to get in the game and you want to build up your skills and build up your tools, but you don't want to get run over. You want to definitely avoid ruin. When you increase time, for example, you eliminate getting stopped out by random noise in the market. The market can still be irrational, make no mistake, but you don't have to surf so close to the rocks that every breeze can cause ruin. For me, I would rather make $100 10 times on high probability trades than lose $1,000 on a quick, low probability trade. For example, you can sell a put that has a 90% chance of expiring worthless, meaning you get to keep all of the premium that you receive. And you're profitable. And that's literally the first rule is you need to be profitable. You need to win more than you lose. You won't win every trade, but if you understand the tools, you can always live to fight another day. If you trade options over a longer term, for example, and if you can occasionally get in trouble and roll out to the next time frame, reduce your risk exposure, jump on the other side of the trade at half the risk. And with some of these tools, you get to be wrong and survive, unlike being subject to near random price movement. This, in my opinion, are the types of active traders you can choose to be. It's like picking a class in Dungeons and Dragons. You choose a class and you choose your tactics, and these are going to be the way that you engage in the market. Day trading is the most popular and, in my opinion, the hardest to do well. It's very tactical and very chaotic. Often smaller, high volatility, low liquidity stocks. And these folks are on the cutting edge. I think of it like close quarter combat, very chaotic and very deadly. Swing traders, on the other hand, are more medium term. They have a little bit longer pattern recognition time, and these guys love to see a plan come together. Slightly less volatility, a little more moderate risk, and in my mind, they're more like snipers taking targets of opportunity, sliding in and out with slightly less exposure. Position traders, of which I consider myself, have longer time frames still. Time frames actually closer to what our passive trading friends, or passive investing friends, I should say, would use. We look at larger economic cycles, financial reports. We reduce our risk where we can steal the edge from those passive investors by extending that time a little bit. And of course, there's the discretionary folks. I don't even know what these guys are doing. These are the 360 no scope version of traders. On the last slide, we talked about choosing our approach. And on this slide, I think about it like choosing the right tool for the job. I'm clearly option biased. And if you watch my channel for any amount of time, you know that. But there's only four things you can do with options. You can buy a call, you can sell a call, you can buy a put, or you can sell a put. And I'm not putting these up here because I think every single person should be doing all of these trades all the time. I put them up here because I believe options are exciting and they're the best way to practice the skills that you would need to eventually become a day trader and do it successfully. Options give you the ability to get the returns of day trading, but with the structural financial assets that allow you to slow down the froth a little bit and increase your probabilities of success. Now, obviously, this is not financial advice, but just a brief commercial for options trading. When you're trading options, you're doing all the same behaviors and learning a lot of the same skills of a day trader. And when used properly, you can avoid getting absolutely crushed. So, what are the general takeaways? You don't need to be so fast. You can slow it down. You can give yourself more time and take the pressure out of your decision cycle. You're going to want to trade smaller than you think you should. This is going to give you the ability to avoid ruin. You can take advantage of structural edge and use tools that are biased in your favor. So, for example, with options, you sell an option and the theta decay comes in, whether you like it or not. There's an expiration on that option. So, there's a limited time where this trade can get out of control. Now, of course, options have their own downsides, but I think it's important to explore as a strategy employing them. Now, I do say, certainly in the beginning, just to go ahead and buy the cheap hedge. You can make your losses deterministic, meaning you know exactly how much risk you have in the trade on any given trade just by throwing a couple of bucks at a hedge or buying a call or going a little bit long on one end or the other end of the trade. And so long as you're in the game, you're learning. For me personally, I don't like paper trading. Having money on the line forces me to pay attention. But if you can choose a style that gives you a little bit more advantage, you can show up every day. You can do the work. You can avoid getting crushed. And I tell you, if you can survive for 5 years of active trading, you're going to be wealthy, or at least you'll have the tools to be very wealthy. I thought in my journey that I would one day go back to day trading. But eventually, as I followed along my own side quests, I found a game that that works for me and that I love to play. Thank you and have a great rest of your day.